Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. We are coming off a Fed meeting that played out as many investors expected, with Fed officials lowering their benchmark interest rate by 1/4 percentage point and penciling in 2 more rate reductions this year. Policymakers pointed to growing signs of weakness in the labor market while also acknowledging that inflation has, quote, moved up and remained somewhat elevated. End quote. For the latest on that Fed decision and all the analysis that we did here at Bloomberg and post-market action, head to the Bloomberg or Bloomberg.com.
Also happening this week, President Trump's second state visit as president to the UK, bringing along with him the CEOs of Apple, NVIDIA, and Microsoft, among many others, to announce deals and spend tens of billions of dollars on tech infrastructure in the UK.
We, meantime, focused on the data center build-out and spend in the United States. We did that with the CEO of the $77 billion market cap REIT, Equinix.
Plus, the CMBS pioneer who's thrown his hat into the California governor's race.
All that to come. We begin with a big story in the chip world. NVIDIA agreed to invest $5 billion in Intel and said the two will co-develop chips for PCs and data centers, a surprise move to help prop up an ailing arch rival that sent Intel shares soaring on the news.
For more on this, we were joined by Chris Miller, professor at the Fletcher School at Tufts University. He's also non-resident senior fellow at the American Enterprise Institute and advises businesses and more at the consultancy Green Mantle. He, of course, also is the author of the book Chip War, the fight for the world's most critical technology.
Well, I think from the perspective of 10 years ago, this would have been a pretty surprising pair up, but today there's a real logic for it. NVIDIA is a leader in AI chips. Intel has been trying to catch up when it comes to AI, but also Intel's got a lot of unique know-how when it comes to building processor chips, which AI servers still require. So certainly on the chip design side, there's differing areas of expertise that both of these companies can bring together.
All right, but just all of it together, the U.S. taking that 10%, approximately 10% stake in Intel over this summer. You've got SoftBank, their $2 billion investment now in NVIDIA. What is this? I mean, is this what you thought would happen, need to happen to ensure U.S. remain a dominant player in the semi space?
Well, I think we're going to need to wait and see what implication this announcement has, if any, for Intel's manufacturing business. I think there's no doubt that Intel's going to be an important chip designer in the future, perhaps smaller than it used to be, but they've got a unique position in the market on the chip design side. But from a national perspective, what really matters is Intel's manufacturing arm. And that's where Intel has really struggled the last couple of years to stay at the cutting edge technologically and also to win customers away from TSMC, the Taiwanese market rival. And today, NVIDIA produces almost all of its most advanced chips with TSMC. Mm-hmm. There's been a big push from Washington to get companies like NVIDIA to diversify their supply and to try to help Intel become a more successful manufacturer of chips for other companies. The announcement doesn't really say anything about that, but I think a lot of people will ask whether this is a stepping stone for other U.S. companies, NVIDIA or some of its peers, to bring more of their manufacturing business to Intel's manufacturing arm.
So chip war, it is on, or where are we? Is it the beginning of the chip war? And I'm just curious, are you starting to think about, I don't know, another book and where it goes from here? Give us your thought here.
Well, I think we're in the thick of the chip war right now. Next to this news about NVIDIA and Intel, there's a big debate going on in Beijing and in Washington about which companies should be allowed to buy which type of the AI accelerators that NVIDIA specializes in designing that are almost exclusively today produced in Taiwan. And so you've got these competitive commercial dynamics intersecting with high geopolitics. And today you can't really separate the chip industry from the decisions of President Trump or from Chairman Xi.
Well, that's a really good point, and kind of brings me to my question about Intel specifically and the U.S. taking this unprecedented stake in this chip maker earlier this year. What did you think of that, Chris?
Well, I think the U.S. has been pretty clear in its desire, going all the way back to the first Trump administration through the Biden administration, as well as both houses of Congress, both parties, that it sees Intel's success in manufacturing as important for U.S. national security. Right now, most of the world's advanced processor chips are produced by one company in one country, Taiwan. And the U.S. wants a more diversified base of manufacturing these ultra critical chips that are key both for smartphones and computers, but especially for AI. And Intel is one of the three companies in the world, alongside Samsung and TSMC, that can produce these cutting edge chips. And it's the only US company, the only company with a major US footprint, at least right now. And so that's why the US government has been trying to find ways to help Intel out.
So what would it,
go ahead.
Well, what would it take for Intel to be able to compete with TSMC? I mean, it got money from the US government. It's getting money from Intel here. As Carol always says, the devil's in the details. And you said we need to see exactly where this money goes. But what do we need to see to say, okay, this US company is now competing with TSMC?
So there's no doubt that Intel needs money, and it's raised some money from SoftBank and the US government. But the key thing that it needs is customers for its advanced manufacturing processes. You'd only prove whether or not they work if you've got at least medium-sized, but ideally large-scale customers that are going to let you produce thousands, tens of thousands, eventually millions of chips on your manufacturing process. You can't scale up without customers. And right now, Intel's got a couple of smaller customers for its manufacturing business, but it's thus far failed to win a very large scale customer. And NVIDIA is one example of a company. There are others that could provide a really large contract that would let Intel test out its cutting edge manufacturing. And right now, I think the entire ecosystem is waiting to see, will it win some big customers that lets it complete that scale out and testing of its cutting edge manufacturing.
All right, so we're talking with Chris Miller, professor of international history at the Fletcher School at Tufts University, author of Chip War, The Fight for the World's Most Critical Technology. Hey, Chris, one thing I want to ask you, and I want to go back to China. There was a story I was reading by our Javier Blas, an opinion piece, and it was asking, why is China stockpiling so much surplus oil? And there were like 5 or 6 different reasons, and one of it was, does China fear an interruption in supply beyond U.S. and European sanctions? Oil traders who traffic and intrigue utter only one word, Taiwan. Do you believe that there is a strong possibility that there will be a conflict involving Taiwan? And what does that mean for TSMC, who is so crucial in terms of the global chip supply chain? What could that potentially mean for the United States, the global economy? I mean, can you play that out and what the likelihood is?
Well, there's no doubt it's a possibility. Nobody knows for certain what the likelihood is, but I think the magnitude of impact is so large that even if you think it's only 5 or 10% likely, you've got to take steps to prepare. All of the biggest, most valuable companies in the United States require silicon that today can, in some cases, only be sourced from Taiwan. That's true for NVIDIA, true for Apple, true for Google, true for Microsoft, true for Meta. The entire US tech ecosystem relies on Taiwan's expertise. And that's why there's been this push for the last couple of years to find ways to diversify the US from being so centrally exposed to China's decisions about war and peace in the Taiwan Straits.
And the reality is that the US is still very, very exposed, correct? Because of how much TSMC still produces.
That's right. I think the U.S. has made a bit of progress, but there's still a long way to go. And it's a long way to go because TSMC is an extraordinarily capable company, and the entire Taiwanese ecosystem is just so central to producing the semiconductor hardware that our tech firms and AI firms depend on.
What do you think of the politics of this and the fact that TSMC is, has this facility in Arizona and is working to increase its presence here in the United States? Does it put that at risk?
No, I don't think so. I think TSMC's got a strong signal from its customers that they want U.S.-based production. It's got this uncertainty created by the tariffs that incentivizes more investment in the United States. And it's got a signal from the U.S. government, again, across multiple administrations, both parties, that they're going to keep pushing for a bigger U.S. footprint. But I think the challenge that TSMC faces is twofold. First, all of its key R&D remains in Taiwan and will be in Taiwan as far as we can see in the future. So Arizona is helpful in diversifying today's manufacturing, but it doesn't really get you diversification of the next generation. The second thing is that the ecosystem in Arizona is still less developed than it is in Taiwan. And so sourcing the gases and the materials and all the spare parts and specialized equipment you need for a cutting edge chip plant, it's still harder and more expensive in Arizona than in Taiwan. And that's going to be the case for some time until we keep building out the scale of Arizona. And all of that means that Taiwan's going to stay very, very important for our tech ecosystem for many years to come.
Chris, really quickly, 30 seconds here. I mean, was President Trump right in his increasing tensions on China? It started in his first term and ramped up in the second. Was he right, especially when you think about semiconductors? And just quickly, if you could.
Well, I think the key driver of tensions in this sector is actually China's desire to become self-sufficient. We were in a pretty stable equilibrium in 2015 before the Made in China 2025 plan was released. That happened before any of the US policies to support its own chip industry. And that was really the catalyst for introducing geopolitical tension as a central facet in the chip industry.
All right, so glad we could get some time with you. So relevant as always. Chris Miller, author of Chip War and professor of international history at the Fletcher School at Tufts University.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Hey, over the summer, one of the things that caught our attention, Bloomberg News reporting that the world's largest technology companies, so we're talking Microsoft, Amazon, Google, all of them planning to spend billions of dollars, more than $344 billion on capital expenditures, with much of it, Tim, going to data centers for AI models.
According to Bloomberg intelligence analyst Amandeep Singh, companies have, quote, basically tripled CapEx investment in cloud due to AI, with executives emphasizing the need to invest quickly to get ahead. Our next guest is helping those hyperscalers scale up when it comes to AI. With us in studio is Adair Fox-Martin, president and CEO of Equinix, the nearly $76 billion market cap data center REIT. It trades under the ticker EQIX, down so far this year about 18%. Adair, welcome. Good to see you.
Thank you so much. Thank you for having me.
Nice to have you.
So how's business?
Business is very good.
Like the best you've seen it?
Like we're in the middle of a very strong cyclical demand cycle for, the products and services that we offer.
When you say we're in the middle, help us understand how long that means of a runway there is to go here.
Sure. At Equinix, we see a very significant trend from the training of models in the AI economy that you refer to in your opening there with the hyperscalers to the deployment of those models in enterprise systems. And that deployment is called inference. And we see that opportunity as potentially double the size of the training opportunity. And at our company, we feel we were built for this moment.
Has that happened faster than everybody anticipated? Because I do feel like the conversation, although we've been talking about AI now, almost 2.5 years, well into 2.5 years, but we are now increasingly talking about all of this stuff starting to be put to work.
Right. You can certainly see organizations, we have 10,000 customers across the world moving from proof of concepts into production systems and applications of the technology.
One of the things I think we're curious about is, as you know, the news flow is fast and furious from the White House and out of Washington. And there have been some announcements out of the Trump administration about AI infrastructure initiatives specifically. So I'm curious, Adair, have you seen any impact of that on your existing properties leasing effort? And I'm curious how does that kind of compete their program with your own development program?
Look, we very much welcome the focus that the current administration has on data centers and the importance and the recognition of data centers and their important role in the infrastructure of any economy. And we certainly are looking at, some of the properties that have been, identified as potential for RFPs, and we would choose based on locations that would be accretive to our business, because we're very focused in cities, in metro areas, close to where humans are who will use this technology.
Are you getting pushback from cities and humans who don't necessarily want those data centers near them?
Not hugely. I mean, we're very conscious of the role that we play and, the role that we play with communities where we have data centers. And we're very considered about our approach there.
What makes a good location for a data center? Because it doesn't actually, apart from the construction, it doesn't actually involve that many people to keep it up and running relative to the amount of money that's spent on it and what actually happens in there.
Yeah, it's really interesting because I think, when you think about the operations of a data center, you tend in your mind to go immediately to technicians and technology. But actually, there's a whole series of unsung heroes in the operation of a data center, which are the craftsmen and the tradesmen and women, the plumbers, the electricians, the engineers, who basically keep the internet up and running, through this data center infrastructure.
So difficulties in finding those workers. We've done some reporting about that there's, okay, yay, great, the spend and the build, but there's not enough workers to do it.
So I think, the constraints that the industry are facing are around energy and power, around skilled workforce, and then into the supply chain for the equipment that's part and parcel of a data center.
But is that slowing the build that you guys are trying to do and meet that demand?
It is something that you have to actively manage as you are looking to build. For example, in our case, around some of our supply chain portfolio, we've pre-purchased in order to ensure that we can have the delivery dates that we need to bring capacity online.
We talked about the $344 billion that some of the world's largest tech companies are planning to spend when it comes to CapEx. It's like the thing we look for now quarterly when a company reports results. How much of hyperscalers' CapEx budgets actually flow through your company?
We have a very significant approach on a part of the data center industry that we call co-location, because not all data centers are the same. And so co-location is where enterprise customers, businesses, 60% of the Fortune 500, for instance, would locate their workloads or their machinery with us and in a shared facility. We have a JV structure that works with the hyperscalers to build to suit for the hyperscalers. And so that's how we service the hyperscaler opportunity and maintain that very important partnership that we have with them.
I guess we're trying to figure out your exposure. I think your top 10 customers represent about 16% of monthly recurring revenue. So your exposure to the hyperscalers is pretty big, right? Is it manageable?
It's manageable. The hyperscalers, for example, when they operate in our retail facilities, they do so because of the connectivity of Equinix. So that's going to be a requirement, for inferencing and for the actual activation of these AI workloads. So it is for us about connectivity. Connectivity is the secret sauce of Equinix as a data center provider.
What do you mean specifically by that? Because I think we can use the word connectivity to mean a lot of different things, certainly in the business world. What does it mean specifically?
For us.
Yeah.
So in our world, it essentially means we're located in 273 data centers right across the planet. Inside those data centers, we have ecosystems of customers whose value chains are connected to each other, and we physically connect them, literally interconnect those customers one to the other. That's the first part of interconnection. So that allows for low latency transactions to happen. Say, for example, on a trading floor, that allows for that to happen in real time.
Instant, yeah.
Right.
Got it.
We're speaking right now with Adair Fox-Martin, President and CEO of Equinix, joining us here in the Bloomberg Businessweek studio. You mentioned the difference between training and inference. Thank you. When you think about this, like a company like CoreWeave, for example, where does that fit into this?
Well, CoreWeave is a neo cloud. They're a company that provides GPU capability to companies who want to train their models. So they fit into the ecosystem in the same way for us as other cloud
like
providers.
Like a GPU as a service?
Correct.
Okay, so what are the average lease terms for an agreement with a GPU as a service organization?
It would depend. They can be relatively short. For us, our leasing in our wholesale side is 10 years plus.
Okay.
Now, one of the things that I think is interesting is I think we're all trying to figure out the boom and bust of all this. And there was an investor, Jack Selby. He is AZ VC founder and managing partner. He's longtime managing director of billionaire entrepreneurs Peter Thiel's family office. And he said the euphoria around AI may have led to the biggest bubble yet in private technology investing. And so sounding warning bells that a correction in startup valuations is in the cards. Now, we understand when you throw AI, there's a lot of different players. But behind it all is the data center spend. And we have had a lot of conversations about the hyperscalers making, multiple duplicate arrangements with power providers that they're not going to use all of them, but they just want to make sure they've got the power where they need it. Is there any signs to you that there's exuberance, that the spend is slowing down, will start to slow down maybe next year? You're seeing it. You've got a front row seat.
Yeah. I guess we believe in the enduring nature of the transformation that AI and the technology associated with it can bring to businesses. I mean, as I said, we support manifold workloads of our customers. Not just AI workloads, but, standard business process workloads. And we really are about that being that connectivity engine. So, I think in many ways our business model is somewhat protected from any potential.
Before we let you go, as I mentioned, some headlines on TikTok from the Wall Street Journal. The deal would create a new U.S. entity, Oracle, Andreessen Horowitz, Silver Lake. Are you involved in this at all?
Well, we partner very closely with Oracle, so it would be through that partnership that we would be supporting.
So you think you will support an independent TikTok?
Potentially.
Okay.
With Oracle.
With Oracle.
Yes, a very key partner.
One last question. Your stock's down. Why? If it's so, I mean, I know there's also an incredible spend in what you are doing. You've got to spend in order to meet the demand. And so maybe that is why there isn't some reward from some of your investors. Yeah. Is it kind of a conflict?
We're very focused on long-term value creation for our shareholders. And, we announced that we are going to bring on as much capacity in the next 5 years as we have done in the previous 27 years of our operations. And so we're very focused on executing against our strategy. We believe in the opportunity that we see in the market and hope to deliver proof points to that to our investor community very soon.
That was Adair Fox-Martin, president and CEO of Equinix.
We should point out that we talked to Adair. That was ahead of President Trump's visit to the UK, where we know a lot was talked about when it came to the tech CEOs that were with him, and that also talked about investments over there in the UK when it comes to the tech world. We should also point out that it was also before we got news of NVIDIA's big investment in Intel. So have to say, when it comes to the tech world, semi world, there's a lot going on. But nonetheless, an interesting conversation because it really plays into the bigger story, if you will, of why all of this is going on because of the AI spend and then the spend on data centers. It's all kind of connected. Yeah,
to that end, Carol, something else that's connected is the news that we got on Thursday morning that Huawei has unveiled new technology from memory chips to AI accelerators, outlining publicly for the first time its multi-year plan to challenge NVIDIA's dominance in a growing market.
Yeah, Huawei's approach seen as a significant milestone in China's AI chipset industry, reflecting breakthroughs in system design and interconnect technologies. And it really signals a stronger push toward self-reliance and resilience in the face of export restrictions. This, again, reporting all done by our team on the ground at Bloomberg News. But it's just... this is what it's all about. We go back to, I feel like when we talk so much about the war that's out there, it's not just geopolitical, it's really a tech war, right? And tech dominance. And you're seeing China making some moves. You and I talk about the EV space and how advanced China has really become in that world and dominating, it feels like, electric vehicles.
I think one thing that's important to keep in mind is where Huawei sits in the tech sphere in China and globally. It's actually China's most advanced chip designer. It's the strongest contender to build alternatives to NVIDIA's industry-leading AI hardware. And as you mentioned, Carol, it also is part of a bargaining chip when it comes to trade negotiations between the U.S. and China. And to that end, we did get news Thursday morning as well when we're recording this, that the call between President Trump and Xi Jinping is set to happen at 9 a.m. on Friday. So before we put this to bed.
Yeah. And what's interesting, too, I want to just say from a market perspective, Chinese tech stocks have surged in past weeks, driven by a perception that the nation's industry leaders are making steady progress in developing homegrown AI and chips. So Alibaba, Baidu are among the companies that have secured important clients for their in-house designs and others. But we've just seen kind of a big spend there.
For the latest, head on over to Bloomberg.com and check out everything on the Bloomberg terminal. Still ahead on Bloomberg Business Week, he's a trader who helped transform the way commercial properties are financed.
And now he's launched a bid to become California's next governor. Ethan Penner is next. This is Bloomberg.
This is the Bloomberg Business Week Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The gubernatorial race in California definitely picking up momentum. Just a little bit more than a year away. We featured a few possible candidates on air, and our next guest launched his own bid to become California's next governor, targeting voters disillusioned with Democratic rule, but Tim not ready to vote Republican.
Our next guest launched his bid to become California's next governor. He's here in the studio with us, Ethan Penner, as we mentioned. He's 2026 candidate for governor of California, also founder and managing partner of Mosaic Real Estate Investors. Ethan, welcome. How are you?
I'm very busy.
Well, you're going to run for governor of California, but you're in New York. Why are you in New York?
Because you're here
talking to us. Well, why do you want to run?
Well, I really didn't see anyone who was qualified to do the job raising their hand, and so I decided I would do it. I feel that we're in a desperate place. I think that California has been so grossly mismanaged for so long. All the statistics bear that out. The quality of life has deteriorated so amazingly over the last decade and even two. And it's time for somebody with the real qualifications to do this job to step up. And that's what I decided I would do.
What would you do differently? What don't you like? What needs to be changed that you think would change the course of California in what you would perceive as a good way?
There are a number of things, but the most obvious thing, the starter, is that we've repelled people. So we've been last in net migration for 5 consecutive years, which means people in the United States have preferred to live anywhere but California, which is shocking considering it's California,
it's
right?
Pretty gorgeous.
And I think that we need to be more welcoming and inviting to businesses. We need to grow our economy. Our economy is important for everyone. It's important to create opportunities for our young people, but it's also important so that we have the funds to make good on the retirement benefit promises that people are counting on. So the first thing I would do is change our tax policy.
Well, let's talk about this, because our understanding is you are releasing a tax plan that would turn California from one of the least friendly tax states to one of the top 5. So what details? That's a big, broad statement. The devil's always in the details. So what specifically?
So the Tax Foundation ranks all 50 states by their tax policy. We're currently ranked 49th, and pro forma, my policy would move us to 3rd, according to the Tax Foundation.
How do you do that? How do you do that?
Well,
and what do you do specifically? Because you also talked about needing revenues for things, so I'm just curious how you do it.
Yeah, so it'll be, and importantly, Carol, it'll be a revenue neutral to revenue growth plan. So everyone else, everyone that talks about changing our tax plan talks about cutting taxes. And I understand kind of the intuitive appeal to some people, but of course that really doesn't, the math doesn't work. We need to actually pay for the things we need in California to support our society. So mine is a revenue neutral that will ultimately be a revenue growth idea. It's about replacing income tax with a consumption tax. Fundamentally, that's the plan.
So explain the details there.
We will eliminate all state income tax, both corporate and personal.
Wow.
Amazing. We will replace all state sales tax, including our horrible gasoline tax. And all of that will be replaced by a single 15% consumption tax on goods and services.
But does California, okay, so you're coming at this from the angle where California has been a net loss when it comes to migration.
Yes.
Can California handle more people? Because the real estate prices there, in so many places and very desirable places to live, are out of control.
It's a phenomenal question.
But the challenge is on a local level, because you have all these people that say, yes, we want more affordable housing, but do not build that multifamily house right here.
Our problem has really nothing to do with having too many people. It has to do with too few housing units. So the RAND Corporation published a paper last year that showed that it costs $110,000 more to build an apartment unit in the state of California than in the neighboring state of Arizona or most other states.
For regulatory reasons.
It's all driven by regulatory red tape. That's the second thing I'd have to do, is really streamline our regulatory approval processes. So the tax plan is stage 1. Stage 2 is the streamlining of regulatory processes.
How do you think about it against a backdrop where climate change is certainly impacting California neighborhoods in a big way? And so the Build Back has also got to think about how do you make it safer? So
environmental greatness is really at the foundation of California. I mean, you're from California and you know this. I take all of my vacations hiking in the nature of California. It's amazing, right? And so,
first trip to Yosemite a few months ago for Carol Massar.
So it's incredible.
It's gorgeous.
Big Sur,
It's stunning.
She was blown away.
Everything's incredible.
Blown away
so,
is exactly right.
I really
and passing a massive wind farm to get there. So certainly embracing.
So I think that we have to be as vigilant as we've ever been about protecting our natural beauty and our resources. But we don't need 19 different organizations that a developer of an apartment has to go through an approval process for. We need one very good one, powered by AI with great responsiveness rather than 5 years. How about 5 days to get your feedback? How about 15 minutes to get your feedback? There's no reason that we can't use technology intelligently, and there's no reason we can't have both the things. We can have environmental beauty and environmental soundness and make it easy for people to build the units that we actually need to drop costs and make living more affordable.
One other thing you're talking about too when it comes to housing, and Tim see it, we see it when we've been to Seattle, we live in New York City, go any place where it's warm.
Where it's warm and there's a high cost of living.
But the homeless populations, and I went to college here in New York many years ago, and it was a homeless problem, and here we are again in 2025, and we haven't figured this out. What you are looking to build some communities, from my understanding, in rural areas for homeless people to live in. How would you fund that? How long would you expect it to take to get that done? How do you roll that all out?
So it gets back to the original question of bringing true competence, the required competence to lead the state at this moment. We need the skills that I bring to the table. We need an understanding of how to build things. We need an understanding and appreciation for how to have transparency. It's not that we don't have the money. We've spent $25 billion in the last state money in the last 4 years, and all that's gotten us is nothing but 25% more homeless. So nothing's been solved. We have systems that don't work. We have a management system that's failing us. We don't know where the money is. There's no accountability.
So how do you do this then? You're saying that with this consumption tax, you'll have the money to do this, and how quickly can you get it built?
Well, so it's a combination of things. One is, yes, the money is there. Although we've squandered so much money already, the money is there for this. Second of all, we have to use smart building. We don't have government. We need public-private partnerships, and my government will lean very heavily on private excellence to work in tandem with public oversight to get things done fast. And I think that modular housing is definitely one of the answers.
Yeah.
But we have to combine competence, a commitment to safety, and a love for our fellow people, right? Especially, I'm proud to be in California. We care for our most vulnerable neighbors. That will never change, but we need to do it the right way. These people, unfortunately, with all the money we've spent, still sleep on the pavement.
We're speaking with Ethan Penner, 2026 candidate for governor of California, also the founder and managing partner of Mosaic Real Estate Investors. On the homelessness question, it obviously has to do with housing. It has to do with mental health. There's no easy solution, as we've learned. On the regulatory side of things, you said for building housing, you want to streamline regulations, get rid of red tape. But how specifically do you do that? Because it's an easy thing to say, but as we're learning in the wake of the fires in Pacific Palisades and the waste removal going to New Calabasas and the landfill there, people are not happy about that. Like, how do you do this in a way that satisfies these constituents?
Well, I think it's top down, actually. So I think we have to set a standard from the governor's office in Sacramento. And that standard has to be, look, if I get elected, it will be with a mandate for change, right? I'm the consummate outsider. I don't belong to either of the main parties. I've never had a day in political office. So I'm running for a mandate for change with specific policies in mind. And I believe the people's will be heard through me. And that will empower me to actually make change.
But you understand
I do understand. I understand bureaucracy very well. I've worked in big companies.
But I'm just thinking about Elon Musk, Doge, even in the federal government. And yes, USAID dismantled, other offices or other departments dismantled. But it's not easy to kind of, all of these regulatory checkpoints. I mean, how do you really do it when it gets down to it? How do you do it in,
I'll tell you two things. One, I am not willing to accept that it's hard or impossible to do, and I'm going to commit myself fully to doing that. And I know for sure if people like you and I don't commit ourselves to positive change, the answer is 100% bad. So I'm going to commit myself, and I'm going to do as good a job as I can. Second, I really do believe that most people in government, in state government in California, go into their jobs wanting to do the right thing for their people. I really do believe that. And I think that as a nonpartisan and a non-career politician who's not trying to advance my career at all, I think I'm going to be very uniquely well received by the legislature because I won't be viewed as oppositional in any way.
We got to talk property taxes. Do you think something has to change with property taxes in California? And the context is that somebody like my parents who've lived in the same house since the 1990s pay basically nothing in property taxes, thanks to the passing of a certain proposition many years ago. But if somebody were to buy that house, like, the next family to own that house, the property taxes would be debilitating. Look, and it makes it so people stay in homes for a very long time and contributes to the housing crisis, some critics say.
You know what? I don't believe that's true.
Why?
I don't accept that. I think that our society, our community is served well by continuity. And I think that having people be forced out of their homes because of appreciation, it denigrates our community. It denigrates the continuity of our community. So I would not try to change that policy. I think that's a wonderful policy.
Got to ask you about Governor Newsom, his feud with the president's attention on California, on many states. How would you posture yourself toward President Trump?
Well, I think that both parties are busy fighting with each other about the president, pro or against the president. And I feel that it's a gigantic distraction from the incompetence that they've brought to the table in actually doing their job for the citizens of California. I will not be engaged in that distraction. For me, I'm laser focused on serving the needs of the people in California who would be electing me, who I care for.
But what do you do, though, Ethan, if President Trump, you do a policy and you are a social media post at 7 a.m. in the morning of something he doesn't like, and he says, maybe we're going to go down to California and talk to Governor Penner?
Well,
what do you do?
I think that every leader, Carol, has to approach their job with humility. And I don't see that as often as I would like. So Governor Penner would remember that Governor Penner is a servant for the people. And Governor Penner would understand that whatever he says or does, he has to take in mind, is this in the best interest of the people who he's serving? And fighting with the President of the United States, it's not in the best interest of the people, okay? This is definitely not. So I would try to have a workable relationship with both the legislature that I would need to work with, but also the federal government, because as you point out, that's a very important relationship. Whether it's this president or another president, it's not about my personality and the personality of another, which I think unfortunately we see today becoming the story. I don't need to be the story. My personality is not that important to me. My job as serving the needs of the people who elected me is the only thing I care about.
Well, stay in touch as this year progresses. Love to see how things are going. Ethan, thank you so much.
Thanks for having me.
Yeah, I really appreciate it. Ethan Penner, 2026 candidate for governor of California, founder and managing director of Mosaic Real Estate Investors. We did not get to talk about the CMBS market, so maybe next time around.
Next time.
Ethan, thank you.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including how artificial intelligence is making the grade big time with the dean of the Kogod School of Business.
Plus, speaking of AI, is AI helping or hurting the language learning business at Babbel? The CEO joins us later on.
First up this hour, you might recall a story earlier this month from our Bloomberg News team. It was about Apollo Global Management being poised to launch a $5 billion strategy to invest in sports deals, marking another major asset manager targeting the booming sector.
It's about long-term lending of strategic capital to sports leagues and clubs. Apollo's strategy is set to specialize in lending long-term strategic capital to sports leagues and clubs. It will also consider owning stakes in teams, though this wouldn't be a priority and may hire new staff. Our next guest, too, is investing in sports teams for his investors.
He is indeed. Jeff Luhnow is CEO of Blue Crow Sports Group. He's also former Houston Astros president of baseball operations. He joined us from our Dallas News Bureau alongside Bloomberg News Texas Bureau Chief Julie Fine.
Well, you rightly pointed out there's a lot of interest in sports. A lot of American investors are investing in European football, et cetera. We started as a startup 4 years ago. We wanted to pick our niche. Our niche is to find, own, and operate clubs in desirable locations that have big growth opportunities. So we invested in Cancun FC in Mexico, Club Deportivo Leganés in the suburbs of Madrid, and Le Havre in the Normandy area of France. And those are the three teams, one in first division and two in second division. And the key for us is to operate those clubs well and allow them to make money and to win games.
Jeff, you talk about the key is to operate them well and to win money in games, but really what's the long-term plan? Are you looking at other sports? Do you want to stay in the soccer world? What's next?
Well, we've got a lot of work to do in football. We want Leganés to get back to first division. We want Le Havre to establish itself in second division. And now that promotion and relegation is coming back to Mexico, we'd like Cancun FC to get into Liga MX. So I think our to-do list for the next 5 years is pretty busy and pretty full. But I think over time, we will certainly look at other sports, but right now our focus is football.
I want to talk a little bit. You were with the Houston Astros. You were fired after a baseball scandal. You have denied any wrongdoing, but you are going now and asking people for money. Has there been any issue when it comes to trust?
No, not at all. In fact, many of the investors in Blue Crow are people that were either investors in the Astros or knew me from that time. If anything, it's been an advantage because people knew of what happened with the Astros after we got involved in getting the World Series in 2017 and reaching it in 2019 and, making money for the club and its investors. So we have a very diverse group of investors, people from private equity, entrepreneurs, technologists, et cetera, and they're all very bullish on what we're building.
Does it ever come up, though? I am curious, Jeff. I know we all have our pasts and histories. And I just think, sometimes when it comes to money, people do at least be like, well, let me talk to you a little bit about this before maybe I think about investing.
Well, I think a lot of people want to know about my time in baseball and what we did and how it relates to football. It's never come up as a negative. I was telling Julie earlier that in Europe, baseball is not a very big sport, so people don't even know who the Astros are or who Jose Altuve is. So they really just care about whether we're going to win on Sunday and whether we're going to get 3 points or 1.
Hey, one thing I want to ask you too, though, Jeff, when it comes to owning a team, is it a buy and hold strategy, or because you have investors, is it buy, hold, build up, and then sell for a premium so that there are returns to your investors? I'm just curious.
That's a great question. And the way to make money in football, as you noticed, is you can either hold and sell for more than you bought, but you usually have to cover losses in the meantime. But we're trying to run these clubs to win and grow revenue and eventually be profitable so that we can potentially return some money to our investors as we go along. We're not looking to buy and flip. A lot of the things that we do in our clubs require 3 or 4 years, 5 years for them to start working. And that's why for us, we're talking about more long-term holds.
Talking about long-term and working, we talked earlier about technology and analytics. What role is AI playing in all of that?
Well, the world of football has lagged baseball and basketball and other major sports in terms of the use of analytics and technology. But that's changing. And part of the reason it's changing is in football, you have 11v11. So there's a ton of data and there's a ton of games all over the world. And it's hard to analyze that with just a few data scientists. So AI allows you to analyze a much, much larger volume of data and to generate insights from it. So I think it's going to be increasingly important in our world.
Jeff, we talk a lot here in the U.S. about ballooning sports team valuations. I mean, you're certainly familiar with this. We just had, the deal news about the New York Giants, for example, with American football. And I'm curious if you think the growth here in the U.S. will start to slow down and the real opportunity for valuations to grow as they did here in the U.S. in the last 2 decades. That opportunity is outside of the U.S. now.
I think that, well, first of all, I've always been skeptical about valuations of major U.S. sports, but I've always been wrong. I've been saying that things are overvalued for the last 30 years, and they keep selling for more and more down the road. So I'm not good at predicting that. I do think that buyer beware on European football because there is relegation and promotion, and you have to do things well in order to increase value. And there's a lot of investors that are losing money in this sector as well. So we're hoping to be one of the winners, but we're being very cautious about what we invest in and how we do it.
What makes you skeptical about U.S. team valuations? You know, it's a supply and demand question, right? Is it more complicated than that?
Well, I think that generally the revenue is driven from TV contracts for most of the sports, and I just can't see those continuing to grow at the rate that they've grown. But I know it's happened. So, like I said, I'm not a good predictor of that. But I think ultimately everybody's going to want to consume sports on their mobile or on their their handheld, and that changes the dynamic a little bit. And some of these bigger contracts, may not get renewed at the increases that have happened in the past.
This is going to be a very big time for football coming up with the World Cup. We have here in Dallas, we have the most matches. Houston, your hometown, has a lot of matches as well. What do you think this attention on the sport in the United States will do for it overall?
I think it's going to be great for all of North America, Mexico, United States, and Canada. I'm very bullish on North American football. I have been since the beginning when we invested in Cancun. And, I lived through the 94 World Cup, and everybody was expecting football to suddenly become one of the big four sports. I think it has grown, but I think it's poised to continue to grow. It's never going to beat NFL. It's never going to beat MLB or NBA, but I think it can continue to grow its fan base, and I think it can continue to produce good results.
You are now in soccer. You came from baseball. I want to know what your future is.
Well, like I said, we're just at the beginning. We've been doing this for 4 years. We've got a lot on our to-do list. I'm going to be focused on building Blue Crow for the foreseeable future.
Is there an investor that you would love to have with you for the ride? Is there a team that you would love to go after? And I know who's going to talk, right? Because you don't want to kick up the valuation. But I am just curious, and anything you can share on your investors or who else you'd like to have with you.
Well, we have a great cap table. We've got some people that have in the NBA and the NFL and MLB, et cetera. I don't like to disclose who they are because that's their business. But we're well funded. All of our investors have offered to put more money in if they need to. So really at this point, I think we have an all-star cap table. We've got a great plan, and now it's just a matter of going out and continue to execute.
Jeff, 20 seconds, women's sports, how does that play into it? It's kind of popular. I don't know if you've heard that really quickly.
It is, and there's a lot of money going into women's sports. We have a female team in Spain. We're looking at the sector very closely and trying to figure out what our strategy is, but it's growing in the U.S. a lot, and it's growing in Europe quite a lot, and I think it's going to continue to grow.
All right. Well, you're always welcome to come back and share some more. Jeff, thank you so much. Jeff Leno, CEO of Blue Crow Sports Group, along with our Bloomberg News Texas Bureau Chief Julie Fine. This is Bloomberg Businessweek Daily.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, so we've talked a bit about the resistance to artificial intelligence in classrooms here on Business Week, with some educators raising concerns on how to effectively integrate AI into their teaching practices, students overly relying on AI for homework, and of course, the effect that AI is going to have on the labor market. There's a lot at play here, Tim.
Our next guest is looking to infuse more AI across the classroom by helping students collaborate with the technology. David Marchick is Dean of the Kogod School of Business at American University. He also served in different capacities in the Biden and Clinton administrations, as well as spending a dozen years at the private equity giant Carlyle Group.
So I'm not a techie person, but we had the president of Google, Kent Walker, who basically said that AI was going to be as profound as fire or electricity. And I said, well, that seems like a strong statement, but even if it's 0.1% true, it's big. Then we had a fellow named Brett Wilson, who's a CEO of an AI venture capital firm. And a student raised his hand and said, am I going to be replaced by AI? And Brett said, you likely won't be replaced by AI, but you could be replaced by someone who knows AI if you don't. So at that moment, I said, we need to infuse AI into everything we do to prepare our students for an AI workforce. And we've done that over the last 3 years.
So what does that actually look like in the classroom?
So when you start at Kogod School of Business, if you're an 18-year-old, the first day
because you do undergrad and graduate.
Undergrad and grad. The first day of orientation, we tell you, you're going to use AI every day. Most students were prohibited from using AI in high school, but they did it anyway. So we want to teach students how to use it properly. We actually start by teaching what's wrong with AI before we teach them what's right with AI. And then over the 4 years, or if you're getting an MBA, we want them to learn how to underwrite an investment, how to do fundamental research, how to develop a marketing plan, how to learn to negotiate, all using AI, because they'll be expected to use AI in the workforce.
That's what we keep hearing increasingly is the people who know and understand how to use it as a tool will really do well going forward. Okay, so talk to us a little bit more, though, about, because I think one of the things that we're playing around with, David, is that we use it too. And then it's like, okay, but then we kind of check it out because we just don't totally trust all of it. So tell us how you guys teach that aspect of it, like what to trust, what not to. How do you fact check some of this information that comes across still?
So we have a professor, Ed Wassel, who teaches advanced data management, data analytics. His whole class is used to show how AI comes up with wrong answers, incorrect information. So he has students analyze data sets, come up with predictive analytics, and he shows that AI makes mistakes all the time. That's as valuable as learning what's right with AI. So AI can be a powerful tool, but you need to be skeptical, you need to test it, you need to probe, and you need to be able to shape it to produce the right answers.
You know, I want to talk about your background a little bit and then talk more about AI and perhaps why you approach it this way. You have a really interesting background. A lawyer, you served in the Clinton and Biden administrations in very different capacities. You did more than a dozen years as a managing director and member of the management committee at Carlyle. You've written a book, co-authored a book on presidential transitions. You don't have the traditional background of a dean, like traditional academic background of a dean.
Correct. I also had poor grades and was not the best student.
That wasn't in the bio that I read. But I'm glad you're bringing us that color. How does that perhaps make you think differently about the workforce and what they need to be prepared to do once they leave the academic world?
So I had the best boss ever who actually hosts a show at Bloomberg, David Rubenstein. David also was probably the least likely person to run a private equity firm. He had no private equity background. What I learned from David is surround yourself with people that are better and smarter than you in each of their areas and empower them, and you can do anything. So what we're basically focused on is ensuring that our students are prepared for the AI workforce, the AI economy, which is changing rapidly. Stanford just put out a study that shows that AI-exposed jobs for 22 to 25-year-olds are shrinking between 13 and 20%.
It's terrifying.
It's a very hard time. My daughter graduated last year. It was very hard for her to get a job. We see it every day. And so what we're trying to do is make sure that our students have a leg up when they apply for jobs, so, which means you need to have the fundamentals of a business education, marketing, accounting, management, finance, etc., plus know how to use AI in everything you do. And we're also doubling down on what used to be considered soft skills, communication, teamwork, the ability to think on your feet. Those skills are more important today than in an AI economy. Look at your jobs. You have to think on your feet every day, react to news.
Sometimes it works, sometimes it doesn't. Just
correct. But having an entrepreneurial mindset and being able to think and create is essential for today's economy.
How do you, as an educator, but also somebody from the business world, think about how important it is, though, when somebody, their first couple of jobs or their first job out, they're learning so much, the learning curve is so much, but it teaches their brain to think in maybe different ways that they maybe didn't get when they were at university or at college. And so I'm just wondering, like, are we cutting that out of younger generations, that ability to mess up, learn? I learned so much from mistakes I made in kind of my first couple of jobs. And I'm just wondering, are we getting rid of that?
So I think we are getting rid of it in some ways because AI will replace some jobs. In my view, it's incumbent on universities and educational institutions to be able to foresee that and to give students the skills that you may have learned in your first job. We're trying to give them those skills at the university through in-classroom and out-of-classroom experiences. So we have a lot of competitions for students to learn how to pitch, where they have to answer questions on their feet.
Yeah.
We have investment clubs where students are investing actual money and they need to present and defend an investment ideas. The ability to give a pitch, to communicate orally, to work in teams is as important as ever.
How do you have to think about the admissions process differently as a result of what happens now or what you want to have happen in a school right now?
Traditionally, and maybe this is why I wasn't a great student, a teacher stands in front of a classroom and communicates, disseminates information, which a student absorbs, and then the student is assessed on how good they are by how much they can retain and regurgitate. AI replaces all that. You can get any piece of information at your fingertips. So now the best students are going to be the ones that are most curious, that have an entrepreneurial mindset. They're going to be able to take risk. They're going to be able to figure out stuff on their own. And so we're looking for that in the admissions process.
You know, it's funny. Carol and I talk about this a lot because one of the things that we found these LLMs are so good at is if you prompt it properly, it can essentially write you a paper to answer a question that a teacher... I mean, I'm not giving anyone any news here that they don't already know.
Students are way ahead of us.
Students are way ahead of us here. I mean, for me, as somebody who graduated from 20-ish years ago, this is kind of crazy. But I think back to my own experience in college. I went to a liberal arts school, and some of those aha moments that occurred for me were late at night when I was trying to write a term paper or trying to write some sort of analysis of a book I read. And those are the moments that stuck with me. Those are the moments where I learned how to make those connections. Do we lose the ability to make those connections because of this technology?
I don't think so. I think it actually aids you. So you were probably a better student than I was. But when I was writing an essay, I had a hard time figuring out topic sentences, structuring an essay, structuring an argument. AI can help you do that. It's a collaborator. And so those aha moments are still there. They're just different. Also, the ability to work in teams is going to be much more important today than it was when we were growing up. And I have students come to me all the time and say, boy, this teamwork is hard. This one student is a show-off. This one doesn't do their work. This one has views that I can't understand and they don't change. And I'm like, welcome to the real world. I have that every day in my job, and I've had it every day in my job for the last 40 years. So teaching students not only the fundamental basic skills that you learn, reading, writing, reasoning, plus AI skills and these soft skills, which I call power skills, that's the future of education in my view.
But are we also losing, though, the ability of people kind of struggling, David, through something and maybe having to work a little bit hard and understanding the idea that, okay, maybe spend a little bit more time with it, dig a little bit deeper, I don't know, look at some different sources and figure something out versus going, I'm blown away by some of the stuff that you get off of ChatGPT and other chatbots, if you will. And I'm just kind of wondering, are we losing something maybe?
They're still struggling. But let's say I were a 22-year-old and I wanted to be your research assistant. You would expect me to be able to find any piece of information at my fingertips any day and deliver it to you. You'd expect me to have much more advanced skills today than if I were applying 20 years ago, or in my case, 40 years ago. So it's just a different type of struggle. And the students today need to learn how to do the stuff that's required in an AI economy.
Can I ask you about teachers? How they've had to rethink how they teach? Because that's something you guys have had to deal with as well.
That is a great question. Faculty traditionally are very resistant to change. We have faculty that have taught the same thing over and over again. We've actually created a very entrepreneurial culture among our faculty where we started with a few early adopters. Then we had some others that we dragged along. Today, 90% of our faculty are infusing AI into their classroom. At the end of the spring semester, it was 50. So over the summer, there was just a cultural change where everybody said, the parade's leaving, I either need to get in front of it or I'm going to be left behind.
So what do you think, David, is constructive for we as communicators and having guests? And we're talking about AI. I feel like every conversation somehow, all roads lead back to AI.
Are you trying to get him to give us advice about how we AI-proof ourselves?
No.
Because I would be open to that too.
I'm just thinking about the smart way to deal with it, because I think it's really easy to get caught up in the exuberance around it. There's so much spending that's going on, and we're trying to, like we even today did kind of a reality check about where we are in AI.
Like, it's kind of a wild world where we're talking about $200 million salaries for people who are poached and brought to meta platforms for a specific technology.
Just trying to understand, what do you think is constructive based on kind of the experience you have had reorienting your approaches there?
So I think what we're seeing is a technology revolution in a much more abbreviated version than we've seen it before. It's the fastest technology ever to be adopted. So ChatGPT has acquired the same number of users, 5 times as fast as Netflix or Amazon, 20 times as fast as Facebook. Mm-hmm. So when the mobile revolution took place, which we all lived through, it took 30 years for us to really use the phone for everything. AI is changing that in a matter of months. So I do think this is a transformational change that we're seeing. It's going to change everything in the economy faster than any technology change that ever has happened.
Do you think we know if yet it's good for the economy?
I don't think we know. I think there's big pluses and I think there's big minuses. My view is that there will be winners and losers. And my focus is taking care of the students that are at my school to help them prepare.
Well, let's talk a little bit about the outcomes that you've seen thus far. You're really still early into this experiment. 3 years ago, as Carol mentioned, was when you set out to become the first AI-first business school in the country. What can you tell us about graduates who are finding full-time employment on the undergrad side, then also on the MBA side?
It's helping them. It's helping them have a leg up and be more competitive. One of the things I'm most excited about this year is we're offering an AI minor to non-business schools. So let's say you're a student that wants to go to med school. You've done what traditionally a student does, taken a bio degree, you have some labs, you're applying to med school. If you have an AI minor, you're going to be much more attractive because AI is going to transform healthcare more than perhaps any other field.
Right.
If you want to be a policy major and go work for a United States senator, and that senator or the chief of staff says, okay, you're a policy major from a good school and you have an AI minor, I know you're going to be able to do research for me, for any hearing, for any questions, for anything I need to know much faster, and you're going to be able to analyze data much better than others. So I think it's a huge leg up for both business students and non-business students.
Do you ever envision a class where it's just someone talking to you, like ChatGPT or whatever version might ultimately come out? Like, you just think about we always talk about a great conversation, how much we can learn, and learning to ask the right questions. But I think about that back and forth. I
think Duolingo's CEO has said that AI could replace teachers.
AI could disintermediate the whole education system. Okay. And we're experimenting. I'll give you an example. We have a professor named Tommy White. He runs our entrepreneurship program. He's incredible, one of those popular professors. He created a class this year using all AI to create the class. It has no books, no reading. The only assignments are prompts. Prompts plus teamwork.
Huh.
We'll see how it goes.
Yeah.
Will it work? I don't know, but we're trying.
So maybe.
I mean, we're experimenting, and that's one of the things that we've done to create this AI first culture.
Yeah.
Is we've told our faculty it's okay to fail because nobody really knows what's going on or what we're doing because it's so new. So try something. If it doesn't work, try something else.
Really interesting stuff. Hopefully you'll find some time to come back to us and continue this conversation. Love. Maybe we talk to some students at some point.
That'd be great. We have some incredible students.
Yeah, I think that would be a lot of fun.
Should we get on the road, go to D.C.?
I'm happy to do that.
Okay.
Come teach a class.
We could try that. Good stuff. Thank you, David.
Thanks for having me.
Really appreciate it. David Marchek. He is the Dean of the Kogod School of Business at American University. Really fascinating conversation. If you missed any of it, please be sure to check out our podcast. You can download it a little bit later on.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
All right, so earlier we talked about AI's role as a tool in academia and how it can help students better prepare for the future of work. On the other hand, certain AI tools can be seen as a real competitive threat to companies in the language learning space.
Apple unveiled its new AirPods 3 with a live translation feature, giving us a glimpse into a future where global communication might be seamless. What does that mean, though, for the way we actually learn languages, and how does AI fit into that picture?
So to help us answer some of those questions, we were joined by the CEO of Babbel, Tim Allen.
Language learning is the oldest software known to man, so it's not going anywhere. What I love about what Apple and Google have done is it actually generates more interest in this space. So what we find interesting, especially on our product Babbel, is when users or learners go to take a trip or go into a foreign country, they actually come back and they're more interested in learning the language. So we see all of this as a tailwind because we think that ultimately, I think the technology is really cool as well, right? It's so interesting. Put in AirPods, you can go from one to the other. But what people will then do is adopt and go, oh, I really want to get into the language. I really want to belong in the language.
That's happening right now because
volume.
So Tim, I get that that's happening right now because that technology isn't widespread, but I can just imagine in a few years, we won't even need another device. We'll have it it'll be a wearable, and then it'll be even more seamless. Do you see that continuing to drive demand?
So what's interesting about that is I think short of a neural implant, people are going to always be learning languages, right? So that and a universal language, those are the two things that could disrupt the market. So what will end up happening is that the iPhone, when it came out, everyone declared the death of language learning, right? Because you could hold up your phone, you could do the same translation that the AirPods are offering today. Even a wearable can do it. The difference is that people actually want to live and breathe inside of the language. In fact, we just launched a part of our new technology that explores AI that brings both the pedagogy and the human learning aspect of it together with AI called Babbel Speak. And what that does, it allows people to actually practice the language they're learning with an AI coach, an AI tutor. So there's predefined conversations you can practice with. It does small corrections. But we see this as a complement. We see this as a way for people to actually learn and accelerate the transmission of the language. I think the new technologies are really going to allow for dabbling inside of a language. It's going to be great on the go. It's going to be great for those one-time use cases. But people will always want to learn and live inside of a language themselves.
How do you view, though, more generally, Tim, kind of the landscape of learning apps with the introduction of GPT-5? We saw the team create a custom language learning app in minutes during the demo.
That's cool.
I mean, it's kind of amazing how quickly all this is happening and how quickly you can do things. Do you view AI products like this as a real competitive threat? And what can you do to keep your user base and sustain growth?
Yeah, I watched the same demonstration. It was a cool French app that they had created. It has limitations.
Was it cool,
right?
or were you like, oh my God, this is going to be difficult for us?
What was cool? No, definitely not an oh my God. It was because it was created so quickly. And what I think is so cool about it is people are starting to learn on demand. What the difference is, though, is I think that people will want pedagogy, they'll want lessons, they'll want content, they'll want to be able to actually know that they're getting a trusted guide through the language learning process. Large language models, as you know, are good at many things. They're good everywhere. They've been declaring for now almost 2 years that they're going to take away all of the jobs and just really disrupt all the markets. But I think what ends up happening is when you start to get into really narrow spaces, such as language learning, people want to know that they have a real lesson plan, that they have really the transmission of the language in a way that's going to adapt to them. And that's what we think AI is going to empower inside of Babbel. We think it's really going to allow for the personalization of your individual learning plan, but with the content, the pedagogy, the transmission, so you retain, you're able to speak it, you feel fluent, and you actually feel comfortable with it. So I think from a build perspective, it's really interesting. We look at it as a tool to really help facilitate and go to market a lot faster.
Okay.
I think from a transmission and a trusted content, it'll actually end up being niche markets with real players such as ourselves.
All right. So the truth will probably be in usage or the stickiness. And I'm assuming then you're signing up more and more people. You're very enthusiastic amid all of this potential competition. So give us an idea of customers, usership, people sticking to the platform. Give us some metrics.
We're growing. We're going on. We have large demand. In fact, September is one of our larger months, just given the back to school and back to office after the summertime. That and New Year's, as you can tell, the New Year's resolutions tend to be really heavy periods for us. What I can say is we have millions of subscribing customers. We're signing up thousands every single day. Demand has not waned on this side of the equation. We're really excited about the future. I actually get more excited about more of the players showing interest and actually saying, hey, look, this is cool. Understand a language, play with a language. But when you want to go really learn a language, go to the providers you trust. That's
So,
travel.
Tim, you say millions. It would be great if you could. 1 million is a lot different than 10 million or 20 million. So just give us an idea if you could. And how much is corporate versus kind of individual? And what are folks paying for a subscription? And how long do they stay with you?
Yeah, no problem. We have over 2,000 business clients, B2B clients. So I can tell you that we just signed Inter Miami Football Club. They're using it for their players, their coaches, their teams in order to teach them the languages and what they need to be. We've created custom content for them as well, which gets really exciting. What I can tell you is millions of consumer customers. And I can tell you it's more than 1 million and it's more than 2 million and it's more than 3 million. So it goes on up from there. Yeah. So.
And what do people pay? Corporate versus individuals. Yeah.
Yeah, so on individuals, there's a variety of packages, as you can imagine. There's a variety of price points. We have a lifetime price point that users can subscribe for life, and they get all of the features and all of the things that we actually upsell to. And then, there's monthly plans. It is the normal subscription model for what users want from any moment in time.
All right, but give me an idea. So Tim wants to learn what language?
Spanish. Practice my Spanish. Get it better.
He just wants to kind of learn Spanish. So give us an idea. So he signs up, and what would he be paying like on a monthly basis? Or if he wanted the lifetime?
Yes.
Yeah.
Yeah. So if, Tim, you came to the site and signed up and downloaded the app, you could pay $199 for the lifetime. And then there's also discounts available, as all good subscription sites have. But then there's the monthly fee of $29.99 that you could be paying as well.
So I could do $199 for life?
Yeah.
That's a lot less expensive than competitors such as Duolingo, which is, that plus some, I think, per year. So
wait, no catch? Come on. No catch? So Tim signs up. I mean, and that's provided you stick around. No, I'm not trying to say, but right? Like you got to be around, right?
Yeah, look, with any language learning, there has to be a real commitment to it, and you have to actually practice and utilize it, right? But we see life happens, right? The families, I have kids. I'm learning German right now, right? I've moved to Berlin for the job. I knew very little German altogether. But what I can tell you is I have life come up. The kids have school. The kids have activities. I will pick up. I will put down. I will pick up and put down. But the $199 is at life.
Okay. Interesting. I'm curious about Duolingo and the competition that you see there. I'm wondering if you've considered moving outside of languages. We use Duolingo at home, but more so for chess and reading with our kids. I don't know if it works, but
it's great.
The 6-year-old has fun.
Yeah.
Than we do for Spanish right now.
Yeah, you hit the core market there, which is the games are great and they're great learning transmission, especially for the younger audiences. Right now, our specialty is language learning. We really focus on that. We focus on the transmission of language learning. We want to make sure that you have the most effective means in order to go from a 0 to 1 conversation. And the way we look at that is you feel confident walking into a room and being able to know that you're speaking the language in which you're looking to speak. So we focus all of our linguistics, all of our teachers, all of the human-centric pieces, and then we actually use AI as the tool to facilitate that in order to help make that happen faster. So Babbel Speak is a good example of that, where we continue to allow you to practice speaking, continue to allow you the conversations, but we're hyper-focused there. We really think that the games we're going to leave to other people. We're focused on the languages.
You are. Okay, so that's a no? Like moving outside of languages? Okay.
Yeah, languages are a sweet spot.
Hey, when it comes to the AI spend, it's something we talk about a lot, right? I'm curious about what you guys are spending. What are you spending it on? Is it on engineering talent? Is it data centers? Is it content? Is it something else?
Yeah, we've been cash flow positive since 2011. It's a private company, so we're not out there raising capital. We are well funded. We're doing very well. Where we reinvest on our CapEx is we look for engineers. We're looking on AI talent. We're looking at the infrastructure. We're investing in what's going to actually transmit and actually forward the future. We actually think that this is an exciting time to be really looking at product features with our proprietary data set and our proprietary moats that we have inside of our ecosystem. We have hundreds of millions of lessons completed a year. That's very rich data to be taking into proprietary LLMs and data models and really working inside of the AI to work towards the most effective product in terms of transmitting the language.
Are you at this point able to use AI to create language courses? Are you able to use AI to do what humans used to do in recent years?
We actually married the two. Where the real sweet spot is not in removing people from creating the languages, it's in facilitating the people to create the languages. So we do, just to answer your question directly, we do use AI, but we use it with the human-centric piece. We've always found that our linguists and also our teachers are the best to formulate all of the content so it can transmit better than anyone else and more effective. And so what we find is we marry the human with the AI tools. So we're using the blend of both worlds. We haven't replaced jobs in order just to replace jobs.
All right, I've got one really, really important last question for you, Tim. How's the German going?
Sure.
How's the German going?
Ein bisschen sprechen die Deutsch. So I've been using my Babbel every day. Very little, but I'm learning very slowly. So
okay, maybe next time he's on, we do the interview in German. We get Matt Miller in here.
Yeah, I'm on. I'm game.
Matt would definitely do that really, really well. All right, Tim, thanks so much. Fun to talk with you and get some time and hear what you guys are doing, especially when it comes to AI too, incorporating it in. Tim Allen, Chief Executive Officer of Babbel, joining us from Berlin, Germany.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.